Check. Yep, we're recording, but we didn't hear the announcement this time. So sometimes we do, sometimes we don't. Maybe that's another side effect here. Yeah. By the way, we'll be getting into chapter 3, and with chapter 3, we left off as we were talking about departures from GAAP. We're almost ready for it. So we're ready specifically for Roman numeral 2, departures from the standard unqualified audit report. And again, we're just ready for part D, a departure from GAAP. Does anybody, by the way, need a copy of the handouts? Okay, one, anybody else? Let me go grab one for you. So let's see these departures from GAAP. Excuse me. So a departure from GAAP. We know that this means something actually violates GAAP. It could be that there is some error, such as a mathematical error, or it could be a posting error. We could have transferred the wrong number, posted the wrong number, that is. Or we could have posted to a wrong number such as this. At the very end of the year, we're supposed to make some adjusting entries. Those are often skips because there's no movement of cash or anything else in these non-routine entries. So clients often forget to make them. Or if they do make them, they may make them wrong. So very high risk there. Or it could be the client just fails to follow GAAP. Maybe that's unintentional, usually it is, or maybe it's intentional. Or if there's something wrong with disclosure, mostly completeness of disclosure. Oops, the client simply did not disclose everything they should. And usually that's unintentional too. So we'll talk about these departures from GAAP here. So if we have a departure from GAAP, so if we are thinking about a departure from GAAP, and I'm going to go ahead and share my screen here so that I can go to book. Correct page number here. Okay. So, as we've seen before, well, here in the book, if we are talking about departures from GAAP, we know that just like scope limitations, we have 3 levels of materiality. So with these levels of materiality and with the reports that we'll see, we're going to be going to some examples in our book about departures from GAAP and the resulting reports, the audit reports. So with these departures from GAAP here in D, well, a departure from GAAP will cause the auditor to either issue an adverse opinion if it's highly or pervasively material, same thing, or a qualified report if it's somewhere in between in terms of materiality. That means it's not highly material. It certainly is not immaterial, but it's just in between. So again, we'll see the examples on page 55 that I just turned to in the book. So let's look at the first 3 notes first. In the qualified opinion, only the opinion section is qualified. The scope section, scope the auditor's work as, is not qualified because a full-blown audit did take place. Does that make sense? Okay, nothing wrong with the auditor's work. This is a problem just with the client. The auditor's work was not at all affected. Again, the term except is going to be used. So except for this one departure, everything else is okay. And the auditor's responsibility section is not qualified or changed in any other way, again, because an effective audit occurs. Neither is the introductory paragraph nor management's responsibility section going to be modified. So no effect on those whatsoever, and we'll see that again put to work in just a bit in the audit report. Now, number 2, in the adverse opinion, which is really bad. The opinion section states that the auditor believes that the financial statements are not fairly stated in accordance with GAAP. How do you think that seems? It's not good. No. In fact, the SEC, how do you think they feel about this? Not good. With the SEC, they are not warm and friendly people. So, no, they're going to be very unhappy. In fact, the SEC is going to say to the client, you must clean up your act, correct these mistakes, make sure that you get another audit, quite frankly. And then you're going to have to refile your audit report and, in fact, your entire Form 10K. So if you are refiling Form 10K, there's a name for that form, and that's called Form 10KR. So Form 10K, that's what we file each year. But now we have to revise our financial statements. And of course, the audit report will be modified too to be better than adverse. So we're revising.
So, Dr. Quaylen, better than adverse could be a qualified report?
Yes, it sure could be. The SEC doesn't look at that fondly, and quite frankly, they'll scrutinize the client both this year and next year because they want everybody to have clean opinion. But a qualified report for a departure from GAAP will still be okay. It'll do the trick. It's just not that great. Again, these financial statements are not fairly stated in accordance with GAAP. I've seen extremely few of these in practice, by the way. And I remember one was probably a dozen years ago or so, which was for a pay telephone company in Tampa. How much do you think the payphone market is growing with? Not all, no. So this company was on its way down the tubes anyway, and it went out of business shortly thereafter. They actually did have an adverse opinion. I guess they just totally given up. How long has been? Hey, Louise. Man, it's actually the battery. If you're online listening, I apologize for it. I'll be over in just a bit. So, this pay telephone company, again, we might say an adverse opinion that took them out of business, but in reality, no, that was the same, not the root cause. The root cause was, please, who wants to use payphone? I used to think, ooh, they're dirty, grimy. And how do you think we'd like this during the pandemic? I don't think so either. Yuck. And oftentimes they would just, the receiver on pay telephones would just feel unclean. Yuck. So we don't need to put our hands on the grimy things. I don't know how long it's been since I've used a payphone. I really don't. No, I'll just use my cell phone. Thank you. Yeah, and there just aren't many payphones around. Sometimes at an airport, you'll see one. And I remember back in the old days, in New York, people would be waiting to use a phone like a Manhattan. And there were payphones just on the street and not even booths for them. So just a payphone there and a little kiosk, and it must have been really difficult to hear all. Well, then number 3, in both reports, a section for the basis of the qualified or adverse opinion is added, and precedes the opinion section. So this section of the basis, we also call very often an explanatory paragraphs, we know. So it's going to state what's wrong. Again, it goes before the opinion paragraph. So this way people read the explanatory paragraph first, then second, they know why the opinion paragraph is qualified or adverse. Again, that placement of the paragraph is quite important. And yes, they do teach it, or they do test it on CPA exam. So I have to teach it. And by the way, one very common type of question on CPA exam is actually a simulation question, not really an essay question, but a simulation question where you need to do some task. And this task, you're given a bunch of paragraphs in the audit report, and the message is put them in the correct order. So you drag and drop them. So with these things in mind, let's go check out these two types of reports. Well, actually, let me show you. Whoops. Let me just show you the types of reports, a little chart of them that summarizes everything. I saw the other day. Where the heck is it? Oh, well. And let me stop my share for a moment. There. So when if we have this departure from GAAP, which type of report do we issue? We know it depends upon materiality. And there is a chart in the book, but let me just go ahead and reproduce what we know up here on the board. So once again, we have this departure from GAAP. So with our departure from GAAP, just tilt this a bit. By the way, how professors use these? Oh, for crying out loud. Yeah. Yeah, my connection came a bit loose there. Yeah, but whenever that happens, it's like, oh no. You always wonder if it's going to come back. And even though I do have some technical issues, as we all do, we know which professor has the most. Selena Josie, yeah. Bless her heart. Okay. So when we think about the three types of reports that we can issue if we have departure from GAAP. Should actually say reports for. And we will tie this in to the level of materiality. So if we think about that, again, three levels. worst case scenario is highly or pervasively material. Oh, these accounts, nitpicking. Highly or pervasively material, or the in-between level of materiality. And finally, immaterial. So let me start down at the bottom. Anytime that we have a departure from GAAP, which is immaterial, which type of audit report can we issue? Unqualified, you got it. Gold clean opinion, unqualified or unmodified. Type of opinion that everybody wants. Then, once again, we know that if we bump up to the in-between level of materiality, just like scope limitation, we know that we're going to issue which type of opinion? Qualified, you got it. So except for this one thing, everything else is okay about financials. Again, these two are just like they are for scope limitations. So an immaterial scope limitation is unqualified, but if it's in the in-between level of materiality, it is qualified. Most things we find with both scope limitations and departures from GAAP, quite frankly, are immaterial. And we know that every client will have immaterial departures from GAAP and immaterial scope limitations. Life just isn't perfect. Then finally, if we bump up to this highly or pervasively material phase, this departure pervades all the financials, messes them all up. We just can't rely on them. Again, this worst case scenario we know will be an adverse opinion. Sure don't want one of those. Scope limitation, the corresponding report is also bad. It's a departure. It's going to be with scope limitation, it equals a disclaimer of opinion. SEC doesn't like those either, as we saw the other day. So with this in mind, the qualified report for immaterial departures from GAAP is just a regular old audit report. But again, if we have something in the in-between material phase or the highly material phase, we will modify that audit report. So we'll see both these. Let's turn back to the book. Let me share my screen. So here in figure 310, qualified opinion due to non-GAAP. So that's a departure from GAAP. Let me make a little note. Come back on my share in a minute. Figure 310. And for those of you online, I'll show you what I just wrote. There we go. Again, the in-between material phase, a qualified audit report, that's illustrated in figure 310. And in just a moment, we'll go over figure 311. Which will be for the adverse opinion. Okay, let me go back to sharing. So figure 310 there on page 65. This qualified opinion, again in the in-between level of materiality. So let's see what it says here in the independent auditor's report. That title is the same as before. So same introductory, management's responsibility and auditor's responsibility paragraphs as in the standard report, the unqualified one. Only the last sentence of the auditor's responsibility paragraph would be modified as shown next. So we believe the audit evidence we have obtained is sufficient and appropriate to provide a basis for our qualified audit opinion. If this were a nice clean opinion, we wouldn't even say unqualified, of course. Then next, the basis for, there's that word again, qualified opinion. So the company is excluded from property and debt, and the accounting balance sheet certain lease obligations that, in our opinion, should be capitalized to conform with accounting principles generally accepted in the United States of America. If these lease obligations were capitalized, property would be increased by $4.6 million, long-term debt by $4.2 million, and retained earnings by $400,000 as of December 31st, and net income and EPS per share would be increased by $400,000, $1.75 respectively for the year then ended. So they've got this one thing wrong. And as you know, we always give the client a chance to correct first. So we tell this client, oh, here's what's wrong. We suggest that you correct it. If you don't correct this problem, you're going to get a qualified opinion. Clients don't want those. So reading between the lines, this client has refused to make this correction. How bright of an idea was that? It wasn't, especially because good things come from this. I mean, property went up, assets, long-term debt by 4.2 million, but again, that's less than assets go up. Retained earnings goes up. Net income and EPS both go up. Looks like this client would have wanted to qualify this because good things happen. So I would say, not only is this a dumb client, it's a very stubborn client. How much do you think investors will want to invest in this company? I don't think so. That sounds like a competent management. Again, that basis for unqualified opinion is often called the explanatory paragraph. It explains what's going on. Then the qualified opinion. In our opinion, except for the effects of the matter described in the basis for a qualified opinion paragraph, financial statements referred to above present fairly in all material respects. So the rest of what's going on is okay, except for this one departure from GAAP. At the SEC, they're going to take a look at what's wrong. And again, they're probably going to go dumb and stubborn client. So this client's going to get some extra scrutiny, I promise. So next, we've got figure 311. adverse opinion due to non-GAAP. We're going to see the same thing as wrong. So we'll see the same basis for, in this case, adverse opinion, same explanatory paragraph, but we're going to see that for some reason, this auditor in figure 311 has decided this is a highly or pervasively material thing. So they've issued an adverse opinion. It could be that the auditor in figure 311 is very conservative. And as always, if we have a very conservative auditor, they're going to play it safer. In this case, that means to issue an adverse opinion. It could also be that in figure 311, this is a smaller client overall. So therefore, this departure from GAAP is a bigger proportion of the client, a bigger chunk. So that's more highly material too. So let's think about the independent auditor's report in this case. The same introductory paragraph, same management's responsibility, and same auditor's responsibility paragraphs in the standard audit report. Only the last sentence of the auditor's responsibility paragraph will be added, and we see, or modified rather, and we'll see it next. We believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for our adverse audit opinion. Again, not a good thing whatsoever. So then the basis for the adverse opinion, same that we just had in figure 310. And the next paragraph there is finally the opinion paragraph, in this case, an adverse opinion. So in our opinion, because of the significance of the matter described in the basis for adverse opinion paragraph, the financial statements referred to above do not present fairly the financial position of Ajax Company as of December 31st, or the results of its operations and its cash flows for the year then ended. Very, very bad thing. So again, the SEC is going to say, clean up your act. Correct these things, get another audit, and file Form 10-KR. This was, again, a very stubborn client to let this go as long as they did. Any questions there about the adverse opinion? All righty. And I'm sorry for those of you online, I just forgot to share my screen. Oh, no, I didn't. Sorry. False alarm. That's an easy thing to do, to forget to share my screen. Because after all, I'm not facing the screen, so I'm always paying attention as much as I should. So if you ever see that, please just let me know. So now let's come to number 4, a qualified report. It's also issued in this special case if there's an adequate disclosure, or if not all the required financials are present, which is called an incomplete presentation. About the only financial statement that comes up here on the CPA exam is statement of cash flows, because some clients just don't understand it. Some financial accounting students. An adequate disclosure, oops, they need to make some footnote or parenthetical disclosures they left off. Now, how bright would it be to do that? Not another dumb and stubborn client. So we'll issue a qualified report. I will show you. And by the way, if not all the required financials are present, that's called an incomplete presentation. An adverse opinion is not applicable to these special departures of GAAP, although the auditing standards say that it could be used in rare cases for inadequate disclosure. Very rare. It would have to be really bad, and we would have to feel that financial statement readers would be misled by this lack of disclosure, whatever it may be. Also, by the way, the statement of cash flow is omitted. The auditor should not mention cash flows in the audit report except to qualify it. So let me show you this in the book. And there'll be, whoops. Just locate it. Bear with me a second. Let me go grab my book because I'm having difficulty finding the example I want here online. So again, sometimes the online version is formatted just a bit differently than the printed book. And of course, which is easier to find, can't quite remember the wording, but I do know. Oh, actually, thank you, Mary. So they didn't give us an example of that. That's okay. The previous version did. And all I'm concerned with your knowledge is the qualified reports. So in this case, for example, for that lack of disclosure, in the explanatory paragraph of the audit reports, which the auditor will simply state what should have been disclosed. That'll be the explanatory paragraph. So double point, you didn't disclose it yourself in the financial statements. They're or footnote, that is. So we're going to do it for you as an auditor and we'll qualify the audit reports. Oh, that's that scenario. Same thing if one financial statement is omitted. The explanatory paragraph's going to state, it was omitted, incomplete presentation, that is departure from GAAP. Inadequate disclosure is also a part of GAAP. Further violation. So we'll qualify that audit reports. By the way, if the financial statement is not disclosed by the client, incomplete presentation, we're not going to prepare that financial statement for the client. We'll just say it's no. Well, then number 5. If the auditor agrees with the departure from GAAP due to special circumstances, he or she may issue a clean opinion under Rule 203 of the ACC's Code of Professional Conduct, but must add a basis of accounting section after the opinion section. So make sure you do it after. And again, they can test that on CPA exam. They know perfectly good and well that a lot of people will get this reversed and they'll mess it up under test pressure. They'll reverse their answer. Don't fall for it. By the way, on the CPA exam, if they know that some people tend to miss something, why do you think they'll do? Yeah, evilly put on there. They'll ask. So we agree with this departure from GAAP. And we see next that the opinion section will be unqualified. We'll reference the base of accounting used. I'll show you in Exhibit 25.8. There we go. Here on page 63. Oh, no, that's not right. Pardon me. I've got some, oh, not figure 3.8, pardon me, 25.8. I know why. It's because in the example shown on 25.8, that looks a little bit strange, just way up in chapter 25. But they do illustrate what I would like to show you. And thanks, Mary, if you could tell me the page number there, please. All right, no problem. Appreciate it, Mary. So here in figure 25.8, again, don't go for my mental posting error and post in chapter 3 instead. So this is something that we will discuss a lot later. And it is a type of departure from GAAP, but the auditor agrees with it. In this case, we have an example report on the income tax basis. That's okay. We've mentioned this before. And if a client wishes to, as long as they are not public, because SEC says we want GAAP. But if they're not public, they can do as they please. This is probably a small client. And the only reason they're having financial statements put together is so that they are prepared for their tax return. So the income tax basis is very, very common. The auditor agrees with it in this case. It's okay for that small client to go with it. If not, then it would be a departure from GAAP, an unjustified. But this is a justified departure from GAAP. It's okay. So here it is, this independent auditor's report. And we see that we have audited the accounting balance sheet, or I'm sorry, the accounting financial statements of Triangle Partnership. So again, it's not publicly traded, it's partnership, which comprise the statement of assets, liabilities, and capital on the income tax basis as of December 31st. And the related statements of revenue and expenses, accounting tax or income tax basis, and the changes in partners' capital accounts, that's like statement of retained earnings, income tax basis for the year then ended, and the related notes to financial statements. You'll see that those financial statements have slightly different names from what we're used to. We're not supposed to give the usual financial statement names like income tax, or rather like income statement or balance sheet. And with each name, we're supposed to call that financial statement also by the basis of accounting use. That way, nobody's confused about anything. Somebody won't say, oops, we thought you were following GAAP, or an attorney's going to be able to coach them that they thought we were following GAAP. Then the auditor's responsibility, same thing we've seen before. Well, then the opinion is modified slightly to say not GAAP, but income tax basis. So in our opinion, the financial statements referred to above present fairly in all material respects. The assets, liabilities, and capital triangle partnership as of December 31st, and its revenue and expenses and changes in partners' capital accounts for the year then ended, in accordance with the basis of accounting triangle partnership used for income tax purposes described in Note 10. So it's pretty much like the opinion section under GAAP, except again, slightly different financial statement names. And of course, it mentions income tax basis too. Then finally, this basis of accounting used. It's an explanatory paragraph that comes after the opinion paragraph. Let's see what it says. We draw attention to Note X, Note 10 of the financial statements, which describes the basis of accounting. The financial statements are prepared on the basis of accounting the partnership uses for income tax purposes, whether it's basis of accounting other than accounting principles generally accepted in the United States of America. Our opinion is not modified with respect to this matter. So everything's okay. But you, the reader, we just wanted to explain it to you. That explanatory paragraph again goes after the opinion paragraph. The theory is this opinion paragraph is clean. So the readers don't need to know about the income tax basis. To get down to the opinion paragraph, it's clean. Then finally, after that, we clutter their minds by having this explanatory paragraph. Not a bad thing at all. Sometimes this is referred to as a Rule 203 report, because Rule 203 of the EICPA Code of Professional Conduct says it's okay as long as it's justified by the auditor. It's okay not to use GAAP. Again, if we're not justified, that's when we give a qualified or adverse opinion. That's correct. Oh, and where it is in relation to the opinion paragraph? You will, and I've got that. Right, there it is in the book. And I will have another chart. And I will have a similar chart toward the end of the notes. So just show you that chart, just to kind of look ahead here. It's right at the very end of this chapter. And it's about little hint homework questions where this explanatory paragraph goes before the opinion section or after. So I've got them all here. And I think that's what you're referring to, or want to see where all these were. Right. And then turn to the book for the details, see the report itself. Got it. Explain, Right, there'll be a separate explanatory paragraph, but here's where it goes. There's the placement. Okay. So there are two possible ones right there. And then 4 possible ones down there. Okay. That makes sense. Yes, well, it doesn't really matter which order you put these in, as long as the placement is correctly before or after. Yeah, so you don't have to memorize where these 4 are in the list of bullet points. Okay.
But you did say the explanatory paragraph precedes the auditor's opinion.
If the
Or
opinion is modified,
it's not.
if it's modified.
If it's not.
If not, that's when the explanatory paragraph would go after the opinion paragraph. And I haven't gotten to those cases yet, except for the one here, except for the justified departure from GAAP. So yeah. So again, that's where the placement would be. Basically, these two explanatory paragraphs before the opinion section change the opinion section. And these four possible paragraphs would go after the opinion section because they don't change the opinion section. Right. Anything else? Now, in number 6, just remember the auditor gives client a chance to correct any departures from GAAP before issuing a qualified opinion. So generally, this client gives the auditor the adjusted trial balance. And the account balances on this trial balance are called the book values, because here we have what's on the client's books in the way of accounting numbers. The auditor will then gather evidence to determine the appropriate balance for each count, which is called the audited value. And if there's a difference between the audited and book values, the auditor will propose an audit adjustment to the book value. So let me stop sharing my screen for a moment and to show you what this looks like up on the board. So here on the trial balance, well, the client's trial balance would appear here. So these are the client's book values, and the client will again assert that these are the correct balances. So let me show you this for cash. First thing there on the balance sheet, so the client will hand us the trial balance, which, well, financial statements are contained within that, or at least the numbers are. With the book value for cash on the trial balance, it could be debit or it could be credit. Debit, credit, DR, and CR. Let's say this client asserts that this book value is correctly $200,000. And cash is on the debit side, because after all, it's an asset. And it has some on adjustments and a debit or a credit. Columns for each there. And finally, we can have an audit value. Got it. Would be correct. Let's say that we have this auditor here who goes through an audit. And in the second course, we'll see how that's done. But basically, we can audit cash quite complete. We can go in and count any currency the client has on hand. And we can confirm any deposits with the bank, checking, savings accounts, certificates of deposit. We can audit it quite completely and precisely for that matter. So let's say that we go through, we audit cash, and we come up with an audit value of $180,000. So shall we say the audit value is the correct value? The book value may or may not have been correct, but we're professionally skeptical. So we don't fully believe it's correct until we gather evidence about it. So if our audit value came up to $200,000 or within an allotment of materiality for it, we'll see how in chapter 8. If it's close, it's okay. So we'll see how we come up with an amount which is material, again in chapter 8, something big enough to worry about. So the client says for cash 200,000. I'm sorry, Will. So the client will always give us a trial balance, and they'll have it on the computer. You can just go ahead and download that, even into Excel, but every CPA firm has audit software that's even more advanced. So the client is going to give us that 200,000 and say or assert it's correct, but then we're professionally skeptical. We don't fully believe it until we gather evidence. So in this case, we were right to be professionally skeptical. So the correct audit value is 180,000. This auditor proposes, therefore, an audit adjustment. And by how much would you say the audit adjustment should be? 20,000, debit or credit. Exactly. Credit to decrease cash count. You got it. There's that audit adjustment that we propose. We cannot make it ourselves on the client's books because, well, those are the client's intellectual property. So again, we can only propose that it be done. The client must make it. We need to decide if this 20,000 is material or not. And again, in Chapter 8, we'll see some rules for deciding for helping us to decide materiality. So that's where we'll come up with good feeling if it's correct or not. Yes.
Or would they just say this is what we found and then like audit adjustment?
Oh, the latter. So the client will make this change as a corrected journal entry. Ideally, with audit software, there's an even better way to do it. Instead, each previous journal entry that was made and is incorrect would be adjusted. So if this 20,000 spans more than one transaction, we would adjust each of those erroneous transactions. And there would be an explanation with each that we did so. That way we keep track of it. So just watching. Anything else so far? Okay. So that's how this works mechanically. Would you say this 20,000 is material or immaterial? Material. Now it's 10%. Again, we'll see those rules for deciding materiality in chapter 8, but I think we can all agree now that's 10% of the book value. More than 10% of the correct or audited value is material. So we say to this client, we highly recommend, excuse me, that you make this adjustment of 20,000. It's material. If you don't make this adjustment, we're going to give you a qualified audit opinion. Well, we know what they'll do. Hopefully. And once again, they're very stubborn, dumb. They're a very stubborn and dumb client, just like we saw in the book. So any questions here? All righty. So again, the way this works, just like we did up here, generally the client's going to give the auditor the adjusted trial balance. And the account balance on this trial balance, again, are called the book values. That's what the client asserts would be correct. Then the auditor gathers evidence to determine the appropriate balance for each account. And remind ourselves that's the audited value. And if there's a difference between the book and audited values, again, just like up here on the board, the auditor will propose an audit adjustment to that book value. Then B, it's up to the client whether they wish to make this. So clients may or may not choose to record the audit adjustments. And if they do not record material adjustments, then the financials will not be fairly stated in accordance with GAAP. And therefore the auditor will not be able to give a clean opinion. So almost every single time, clients do make the adjustments. So that's why I say that so much of the time, the audit is a big cleanup act, fixing what's wrong. The auditor finds what's wrong, the client is specifically the one which fixes it. So even if there may have been a lot of problems, therefore a lot of adjustments, if they are made properly by the client, we can give a clean opinion. It's okay, because now those financial statements are fairly stated in all material respects under GAAP. So any questions there? Yes, Will.
Auditor have to disclose that there were a number of adjustments that had been made. Is it more of just like understood things?
If understood, basic things. Yeah, good question, Will. So Will's question was that do we have to list someplace as an auditor these adjustments were made? And the answer is we do, as long as they work properly. So it wouldn't be documented in the audit report, but it would be documented in the auditor's work. So come next year, we'd like to review these adjustments that were properly made by the client and just make sure the underlying problems have been fixed so we don't see similar things happening. Anything else? Right. Well, now Roman numeral 3. unqualified audit reports with emphasis of matter explanatory paragraph or modified wording. Well, under the following circumstances, in the list on page 54 and some more details on pages 54 through 58, the auditor can issue a clean opinion, but must modify some of the wording of the standard unqualified audit report. Generally, this will involve adding an explanatory paragraph after the opinion section, since the opinion section is not modified. Again, the auditor will not change the report due to any of these circumstances unless material. And if you see one of these listed in a homework question or on the CPA exam, and it doesn't say otherwise, assume it's material. So assume that we will make one of the following changes we will see. So the first issue is lack of consistency in applying GAAP. Here the client has changed accounting principles. For example, they have changed from FIFO to LIFO for inventory valuation. I hope they didn't go in that direction because LIFO is not consistent with what? It is. We can use either one for taxes. Does anybody know what LIFO is not consistent with? IFRS. LIFO is the American invention. It's kind of a weird way of doing inventory, but came about in the 1930s during the Great Depression, when there were a lot of changes in prices. So I hope instead the client changed from LIFO to FIFO. That's more consistent, obviously, with IFRS. But it's been something like that. Or it's been a change in depreciation method, such as units production depreciation to the most common method of all, which is straight line. And the auditor will modify the report, specifically by adding an explanatory paragraph after the opinion section. I should really put that in italics. Only if consistency is affected, not if comparability is affected. I'll show you that distinction in just a bit on pages 55 and 56. I'll also show you an illustration of the report in figure 3.5. By the way, the client must also disclose lack of consistency in a footnote. Otherwise, disclosure is inadequate. The auditor must also agree with the reason for the change. Otherwise, he or she will treat it as a departure from GAAP. So if the client does use LIFO for the accounting principle chosen, roughly the physical inventory must flow in a last in, first out basis. If it does not, then the form of the accounting principle chosen does not match the underlying substance of the accounting transaction. That's bad. That's a departure from GAAP. So let's go here, page 55. By the way, the 5 things we're seeing in the notes are also reproduced in these bullet points in the book. So we're here with lack of consistent application of GAAP, same thing as lack of consistency. And we have consistency versus comparability. So we see here that the auditor must be able to distinguish between changes that affect consistency and those that may affect comparability but do not affect consistency. I'll tell you what, a change in consistency means an actual change of accounting principles, like LIFO of FIFO, or units production, depreciation, straight line. Those that affect comparability but do not affect consistency, there's no actual change of accounting principle. And I will show you an example of that in just a bit. So the following are examples that may affect consistency, so a change of accounting principle, and therefore require an explanatory paragraph if they are material. So first, changes in accounting principles, such as change from FIFO to LIFO inventory valuation. That's where that is. Again, we don't really like that. It's okay to do under American GAAP, but it's not the best idea in the world because, again, LIFO was an American invention. It's not an IFRS at all. Then changes in reporting entities, such as the inclusion of an additional company in combined financial statements. So let's see what number 2 here is talking about. It's something that you're actually going to see in advanced financial accounting if you go on and take the MAC. So let's say that back last year, 2020, which I always thought would be the year of perfect vision, Lord, if it were, if only. And any of us wear glasses or contact lenses, which hopefully I will get again soon and be able to wear. Well, it's clear by the eye doctor. Well, those of us who do wear glasses or contact lenses wish we had perfect vision. By the way, how many accounts are nearsighted? A whole lot. Oh yes, a whole lot of accounts are nearsighted. Very much so. So back here in 2020, we had a separate parent company with its own financial statements and a separate subsidiary company with its own financial statements. They were not combined or put together. And let me, whoops, and why did I just notice some stuff in the book? Those of you online, and I forgot to share my screen there. So hopefully you're following along on the book on page 55, not just go back there. So in 2020, separate parent, separate subsidiary. A good example is here at Florida Southern. We've got the parent company, or parent organization, I should say, which is Florida Southern itself. We have a subsidiary company, which is the Polk Art Museum, because we now own that.
Would the schools be counted as subsidiary?
Good question. They're not. Right. But they could well be. Yeah, it would probably make more sense, to tell you the truth, to have like the Roberts Academy as a separate entity, but we don't. I don't know why they didn't. Yeah, I'm assuming because Florida Southern originated the Roberts Academy, they set it up, but the Polk Art Museum was already here by the time it was, shouldn't say given to college, but pretty much given to it for a low price a couple of years ago. And it's improved since then. And now we're connected with MoMA, which is Museum of Modern Art in New York, in Manhattan. So that's big. Yeah, does anybody know Alex Rich, the art professor? Okay. He's the head of it. Yeah. He's also from Manhattan originally. Also Jewish. So there is one set of financial statements from the parent, one from the subsidiary, or simply say sub sometimes. Let's say in 2021, these two sets of financial statements are combined. They're put together. You'll see how and why, again, in advanced financial accounting. So they are combined or put together. We will assume very properly under GAAP. So what about the audit report? Well, in 2020, in the audit report, the audit report will have no explanatory paragraph due to a change of accounting principle because there has been none. By the way, this change of reporting entity is like a type of change of accounting principle. So no explanatory paragraph in 2020. In 2021, since there has been a change of reporting entity, again, a type of change of accounting principle, we will have the explanatory paragraph. That makes sense. Okay. Let me go back sharing my screen again for those of you online. Then number 3, correction of errors involving principles. By changing from one accounting principle that is not generally acceptable to one that is generally acceptable, including correction of the resulting errors. So there's a problem with the accounting principle. Let's say the last year the client used fair market values for assets. They shouldn't. That's not in accordance with GAAP. This year they cleaned up their act and they now use historical costs as GAAP specifies. So they've corrected the underlying accounting principle. That is a change of accounting principle from non-GAAP to GAAP. So we do include an explanatory paragraph. That makes sense? Okay. Well, then there are some changes that affect comparability but not consistency, and therefore need not be included in the audit report. So these things involve the following. There's no change of accounting principle here, except one kind is. I'll show that to you in a second. Anyway, first thing, changes in an estimate, such as decrease in life and asset for depreciation purposes. So used to be 5 years, now we've decided it's only going to be 3. That's okay. We can do that as a client. Hopefully the auditor agrees with it. Otherwise, it would be technically a violation of GAAP. Well, how often does this kind of thing happen? All the time. Yeah, changes in estimated number of years of useful life, changes in the estimated residual or salvage value, et cetera, et cetera. If we had to bring this out in the audit report each time the client makes it, well, heaven forbid, that's going to be a really long audit report. Furthermore, how many financial statement arrears really care? They don't, no. So we do not include it in a separate paragraph. Then error correction not involving principles, such as a previous year's mathematical error. So there was a math error or a posting error or a software error, including that could be a problem with a cell formula in a spreadsheet. So good, the client goes back and corrects it. How often do you think this happens? A lot. So that audit report again would get quite long. Second, how many financial statement arrears really care? They don't. So it will not be a part of the audit report. I'll show you figure 3.5 in just a bit. Then variations in format and presentation of financial information. Cosmetic changes in the financial statements. Well, again, how often do you think this happens? All the time. How many financial statement arrears care? They don't. So we won't make a separate explanatory paragraph due to that. Now, number 4 is one that I'm going to explain. Changes because of substantially different transactions or events, such as new endeavors in R&D or the sale of a subsidiary. Let's pick on that latter. Let's move on to 2022. How many of us will be glad, by the way, to move on to 2022? Really happy. We hope it's a better year. We thought 2020 was bad enough. We thought 2021 would be better. It sure wasn't, was it? Here in 2022, we have the parent alone, because I'm going to assume the sub was sold in 2021. So the parent's the only one left. The sub just went away. So we might say this is a change of reporting entity, and it is, but it is not one over which management has control. So therefore, there will be, turn it into this column, no explanatory paragraph. As an auditor, things like that bother us. I wasn't too careful. That's because auditors are what? Which personality traits? Whoops, and oh, let me show you that. I'm sorry, here online. So once again, 2021, that sub was sold. Nothing to report in 2022 except for the parent. So that is a type change of reporting entity, but the key is substantially different type of transaction or event. Client's management has no control over it. So there is no explanatory paragraph. Again, if you're online, that's where I intruded in that last column, the audit report. That bothers accountants because accountants tend to have which personality trait? A, oftentimes, yeah, usually the kind of combination of A and B. Another personality trait. Anybody know? I guarantee each of you have it. OCD. Yeah. Yes. Have you ever done one of the quizzes online, like you see it on Facebook? You have some spare time, just kind of do it for fun. There was one a couple of weeks ago that was about OCD. So my cousin had taken it, so I thought, well, I will take it too. Guess what I scored? Yes. Would you have too, Mary? Yeah, we admit it. Most people in this class would score very highly on it. You would get a good grade. Now, for most accountants, it's not problematic. So no professional's ever going to care about that. But like many traits, it's good in moderation, and it can be very good in certain professions. So I guarantee you, nearly every accountant would have scored close to 100%, if not 100%. Now, a lot of other professions too would too, like engineers, librarians, English teachers. They're very precise, math teachers, teachers in general. A lot of professors would have, but to get through a doctoral program, you've got to be very precise, very compulsive about getting your work done and very determined, etc. So you can understand why it helps. Yeah. So all things in moderation, OCD can be a wonderful thing. Those who don't have it don't major in accounting. But those who do have it and do major in accounting, they are richly rewarded in the end. Why? Yeah, supply and demand. We earn better salaries. We have better opportunities available to us. So we're very happy about OCD, aren't we? Is anyone in here not OCD? See, good, you all admit it. But don't worry, none of us in here are quote unquote crazy. At least I don't think so. Except we're crazy about accounting, correct? Good. None of us have an addictive personality, except we're addicted to accounting. It's a good addiction. I'm glad we're not addicted to drugs, gambling. Etc. Just completing A here, going back to the notes, the client must also disclose the lack of consistency in a footnote. Otherwise, disclosure is inadequate. So they must have that in the footnotes. And the auditor is also going to agree, and oh, let me put this back on share screen, pardon me. So just looking here, disclose that lack of consistency in a footnote, otherwise disclosure is inadequate. And the auditor must also agree with the reason for change. Otherwise, he or she will treat it as a departure from GAAP. By the way, just note something that was in the book. It also says here, whoops, let me go back to the proper one. So yeah, it says items that materially affect comparability of financial statements generally require disclosure in the footnotes. So even these things here, these 4 things that affect comparability, they should be footnoted too, unless they're immaterial. But the changes that affect consistency, in other words, change of accounting principles, must also be footnoted. And the auditor should agree to them as well as to these changes that affect comparability. Then lastly for today, then we'll break. We have figure 3.5 kind of stuck in the middle here. It's back with that change of accounting principle. They stuck it in the middle of the list of things that affect comparability but not consistency, which is weird. Sometimes formatting in this book is not good, especially in the online version. And they just put something in the middle of something else sometimes. I think what happened was that their publishing software automatically did that, and they did not have a good editor who went back and did the human side of placing figure 3.5 where it really should be. So it's stuck here in the middle. Explanatory paragraph because it's change accounting principle. So we have the independent auditor's report, same paragraphs in the standard unqualified audit report. Then finally, there's an explanatory paragraph here at the end. Let's discuss a note 8 to the financial statements. The company changed its method of computing depreciation, and our report is not modified with respect to this matter. So it's okay. As an auditor, we agree with it. And it didn't say that you could bet there's footnote disclosure of this too. Otherwise, disclosure would not be adequate. So any questions so far? Well, we don't have a whole lot of material to finish up on Wednesday. We're almost done with the chapter. So we'll do that on Wednesday. And also on Wednesday, we will be. I think.
No class.
Look, let's just double check. Are we here on Wednesday? Oh, we are not. Pardon me, this will be Monday. And we're not here on the following Wednesday either. No wonder I was confused. We have 2 Yom Tov holidays in a row. Okay. Yeah, and that's why Moshe's not here today, the rabbi over there. So yeah, because, well, it's not Yom Tov yet. That won't be until sundown. That's when Jewish holidays take effect. But I remember him saying that he was going to have to prepare for it. Yeah, and by the way, the Jewish Student Association that Kadeska and I are sponsors of, built the sukkah yesterday. It's over near the Pizza Place Buck Stop. And it's a traditional thing to do. Sukkot is the festival of the holidays, and you have kind of temporary structure covered in palm leaves, which is over there. And you can do things like eat. Okay. So if you're by there and you see it, has anybody seen it or in a previous year? Okay, well, it's there. All right. Well, have a good one. And I will see you back, not this Wednesday. Thank you, Mary. Monday of next week. I would come in and work even though I'm not supposed to. And I would think, where is everybody? So my only assumption would be that everybody is an observant Jew, except for me on that day. Yes, I definitely will. Good. Use that card. Thank you. I sure will. Okay, good. Take care, Carter. You got it. Congratulations. That's your card. I'll forget it. Ooh. You know it too.
That's what that means.
Yeah. Mine was just a little bit sore. It wasn't for me. I looked down.
I don't even know how blue I am. I don't know if it's black and blue
A
or.
little bit. Yes, it is just a bit.
But I survived.
Maybe they hit a blood vessel when they did you, what they did with me. I don't know. I hope mine took effect. But mine is just tiny bit sore.
Well, maybe next
Yes. If I had to have one of 2 shot deals, I bet that second one would have been sore on me like this. a
week.
lot. Yeah.
I told you I was gonna come back.
Excellent. I got one too. I'm hanging on that for dear life.
Okay.
Thanks, you too. Take care.
I'm looking at an application for the early work and, do you know for the recommendation, can you do it afterwards? Is it like, can you go and submit it before you have those turned in? Okay. And then, do you suggest doing like teacher recommendations or like past of employers for like the county internships I've done? Okay,
Just as long as somebody has some process there.
Okay.
They'll be okay with the admissions. Then they send you your application. I'm really-
awesome, thank you so much.
That's not a problem. You bet. Thank you.
I'm good. So I know like on the first step class, I told you that I was gonna- well, you got flooded with the last hurricane, so that's not happening anymore. But the week after, which is like the end of fall break, I'll be getting eye surgery that week, so I'll be missing Wednesday's class. But I can send you an email with like the specific date when we get closer to that. No, I have a different issue. So, well, it's kind of a variety of things, but have you heard of keratoconus? It's basically where my cornea isn't smooth, it's bumpy. So, it's like a chronic condition that progressively gets worse and like results in vision loss, like every eye disease, right?
Yes.
So I have to get a procedure that's supposed to help stop it from progressing further and will actually fix the issue. It's better than those things, so.
Do you use them?
Well, I know the process is like creating like a slit in the eye, and then they use a photoreactive eye drop combined with UV light to kind of like strengthen it. That's like the whole point, to prevent it from stopping and changing. So I'm not sure how they make the incision, but apparently I'm supposed to be awake for it. I'm kind of terrified about that, but I guess they have like some anxiety reducing like shot or something like that. So
If you do it in your doctor's office.
yeah, there's a eye surgeon I've seen twice now who is like working with it. So I'm not quite sure what the recovery period is, but I know he said for at least like the first 2 days, like try to lay low because it's supposed to be on a Monday, and then there's follow-up appointments on Tuesday and the following Friday. So I'm not quite sure when I'll be able to do this.
Don't worry about that.
Yeah.
You adjust to it.
But
Yeah. This it's already has something done in the eye, you know, because I had laser surgery on my right eye to fix the hole or tear, I should say.
Oh wow.
The red. Yeah.
Yeah.
Which is something you'll be prone to as well because you're nearsighted.
I know. I think I just got the unlucky genetics because my sister, who's 2 years younger than me, is like better than perfect vision. My parents wear glasses now because they're older, but never had any eye issues before. So, lucky.
Yeah, it's just like, there's only one family. And my father was supposed to have some this their side. She and I were talking about that, you know, recently. She said, oh, really?
Yeah.
She's the only other one. And I would think it would be from my mother's side, the Jewish side, because being Jewish, there are a lot of people that are extremely nearsighted. And my previous eye doctor correctly identified that, though he didn't know, because the degree of nearsighted is like, really, yes.
Weird. I mean,
Yes.
it's cool that you can tell by that, but kind of frightening that it's that like noticeable or easy to guess.
You have so many Jews for accounts. Oh, but yeah, I'm very nearsighted on account of that. So with nearsightedness, the eyeball is long enough. therefore the retina is thinner. And you can have more problems as a result, like tears or holes in the retina. Or retinal detachment, I know.
That's what
So if you have an examination, you're probably very careful to look at your retina through the slit lamp, and they have a little magnifying glass.
yeah, the little monocle looking thing. that they put up.
Yes, yeah, you see it going back and forth, and they'll say like, look straight up,
Mhm.
look up and to the right, etc. Yeah, getting you to move that retina all the way around. And that's what they're looking for.
Astigmatism as well, just a couple of other few things, so.
I can empathize just with that. Yeah. So, you know, all these fun things for us.
Yeah, I mean, that's like the extent of my issues at this point, so I guess I can be grateful for that, but it is kind of terrifying now, you know, early 20s and I'm already having this kind of stuff.
At least they're very treatable.
Yeah, for sure.
And if you ever have a tear in the retina, they can fix it. They put on the right retina and they put 3 consecutive rings around it. They shot the laser 3 circles, and it took 5.
Really?
Yeah.
So how long do you have to, what's the recovery time on that before you said you're waiting to wear contacts?
What happens is that I shouldn't really disturb the eye too much, like putting a contact lens in. So I just have to be careful and kind of let the eye rest. Then I go back. And hopefully not.
Okay. Yeah, I've tried contacts, tried to learn how to put in contacts like twice now. Both times I kind of gave up on it. I don't know what it is, if like my technique is wrong, or maybe it's just like the shape of my eye.
That could
Everything's a
well
little
be.
stuff.
It's-
Like, I don't know what it is, but they told me that like moving forward, in order to get like the best vision I could get, I guess there's a certain type of contact lens that sits on like the white part of your eyes,
Oh,
which are like supposed to help give your eye that curve that I don't have. But that's even bigger than a normal contact. I have no idea if I'd even be able to put that in. So we'll see.
they're toric lenses. I wear torics.
You do.
Double torics. So the prism correction for astigmatism on both sides. That's a really hard lens for the close. So yeah, I've got problems too. I get into the eye. I think, yeah. Yeah. I'm afraid. Yeah, these things, I know it's not pleasant to go to the eye doctor, have your eyes dilated, have that really bright light in them that you think is going to go blind, and then it gets worse. They put the little magnifying glass up, but about half.
Yeah, I have a picture somewhere, like, it didn't really, well, I knew it was like a bad vision problem since I was like super young and stuff like that, but I didn't know it was like this big of an issue until fairly recently, like earlier this year. I went to the eye doctor. And I had, I want to say 3 different prescriptions written within the same day.
Oh,
Because they just couldn't get like a super good read on it or whatever. And then it ended up getting to the point where you're like, okay, you know, there's probably something going on here. Now I can't find it. But they did like a topography like of my eye,
I know exactly.
and like it was all over the place in terms of like what it should look like versus what it actually looked like. It was that's when I was like, okay, you know, there's something bigger going on here, and that's when I went to like the eye surgeon and had him check it out, all that stuff. So
Yeah, they put, it's a machine and you have your chin in, your forehead forward. And then it has, almost looks like a test television screen with a big dot. You can see
yeah,
the line go up and down until you don't want to take the picture. So they do that for you in the records.
so that's what.
I know, just,
So you understand.
yes, I do.
Well, when we get closer, I'll send you the like exact dates so that you'll have it for your records, but
Where was wedding supposed to be, by the way?
Philly.
Okay, yeah, that's for my cousin's son playing. Was. And it was supposed to be last year. And that got postponed. Well, then this year, it was to take place right through school. So I was going, and that's when this went. So I wasn't supposed to fly or look a lot of these like 12.
So they still have it, just cranked up.
They did that. That's it. Because it's their city building, you'll want for Spartan store.
Okay. Yeah, I'm not exactly sure where this was supposed to be. All I know is that I guess like the thing that they had got torn up by the storm, so. I think they said that they were just gonna postpone it because they didn't have enough time to pick another thing, all that stuff before. So,
I know more issues
Yeah.
due to, well, COVID, hurricanes, etc.
yeah, it's
Global warming there, I guess.
things that are.
Things out of our control, exactly. But I know it's too bad.
Yeah.
That's life right now.
Mhm.
More problems than usual.
Yeah, exactly.
Yeah, specifically, this was not in the department store itself, but it was in a ballroom, like on the 6th floor. I don't know, well, it's now amazing that they used to call it one acre department store. Rishings from the 1860s, so very elaborate. And downstairs, there is a big pipe organ that someone actually plays periodically. And alongside either side of this pipe organ, near Christmas, they have Frosty the Snowman in little individual panels. It looks like a light bright set. Remember those? You plug in the little LED lights. Okay, sorry. That you see the dots and it kind of makes simple figures. So that's what this is like.
Sure, it would have been nice.
I'm sorry, I missed it. I know the food was really good too.
Yeah, that's what's all about.
Exactly.
So it was. Here for it,
You bet. Things to drink.
Yeah.
I drink very little. That doesn't impress me. So,
I just had my 21st last month. It's like, no, another birthday. Nothing. No reason to really want to.
I've never been told.
I don't know. I think it's more of a fad for people my age than anything else. I think it's just like the thing to do rather than most people being like, yeah, I actually enjoy doing that. So.
Exactly. So, are you from Philly or are you from?
I was born in Georgia. My dad's family's in Philly, though. So it was my cousin or his cousin's wedding that we were supposed to go to. I haven't been up there since I was too young to remember, so it's been a while. So that's why I'm really looking forward to it. And then, of course, it's but I'm sure they'll reschedule and we'll be making plans for the next one. So
That's what will happen. As long as nothing else happens next time.
yeah,
Like eye problems.
yeah, exactly.
Yeah, after this procedure, you'll probably have to be easy too, but not lift a lot. Enough water.
Yeah, well, I was planning on flying for going on a trip right before school came back, right after my birthday. I was supposed to go to New York City to visit a couple friends and then take a trip over to Minneapolis to visit a few more, and then come back a few days before school started. But I ended up getting COVID like 2 days before my flight. So kind of ruined the whole thing. I was pretty bummed about that. So just a bunch of unfortunate timings.
Again, I can empathize, you know, just like this eye.
Yeah, exactly.
Yeah. These things come up, and I'm glad airline policies are loose these days.
Yeah, exactly. So I think I have a year to use the credits and stuff that they gave me, but I don't know. At this point, it's too busy to try and reschedule something quite yet. So, and plus, I don't know if I really want to go to New York in the middle of December. over Christmas break or something. It'd probably freeze to death if that happened.
It was on Christmas Day. A friend and I walked across the Williamsburg Bridge to from Panhandle. And in the middle of the East River, it was so cold, I was getting colder than that winter. So why we walked across it, we just don't know. It's one of those stupid things that people do. Yes. It was Christmas. Yeah, now I remember. Because we were joking about it was Jewish Christmas. Yeah, Jewish friend. So yeah.
I've been in Florida too long now, so my blood is ready for cold weather.
Yeah. When I go back to the ride first, I'm really cold until my body readjusts. And then it's not so bad. But
Yeah, by the time I adjust, it's probably ready to go.
yeah. That's what happens. And next month, I was in my cousin from Southern California, we're also there. And inside buildings, all three of these were cold. It's as though the cold creeps in and they don't heat activate.
Yeah,
Yes, you notice that?
I feel like in Florida, like there's the opposite too. Like sometimes they'll overcompensate with the heat. Then, I don't know. Yeah, and then I'll be cold in here when it's like 90 degrees outside. So
Yeah, it's all three of us were really cold, but then finally we were getting used to the sun go home. You know, the climate has back up winter.
Yeah.
She's originally from Detroit area, so that's a lot of my family. Went to the not only is it place, but in the winter's like horrible.
yeah, I don't know. I don't know anybody who lives in something don't have any family, but it's certainly not on my list of places I want to move to.
And the summer, there's nice things to watch. And even the Detroit area, there's some really good things to see. In some parts of Detroit and some suburbs are, yes. Yeah, it's like, here comes another boy.
Find yourself in a shootout.
Yeah. And Detroit has lost over half its population. So there are a lot of vacant houses and buildings, buildings. And lots of firms because they're huge homes of ours. It's nice. It's very quiet. The burn down structures in Detroit are still there. And before Halloween, they will have double signs. And that's a time for lots of find sports.
Yeah, right. I think like the purge, where you have like the day where everybody just goes out and does whatever. But I don't know. That's a movie, and this is reality. So
Yes. Oh, my goodness, it's different times than the one that they're on a recruiting trip. In 2018. I wanted to see where my great grandparents used to live. I've been there since I was a child. I saw my Google Maps. The house was all over there. So I went there, and as it turns out, the house really was gone. It was different time, and then one house will burn out. And then the houses were extremely well kept. It was such an iconic. It was really weird.
you've got the nice houses, and then you've got the burned down lots next to them.
Yeah, like here's a nice house, here's a burned down house right next to it.
Yeah,
It's awful in terms of high taxes. Very high. Somebody's not all this.
yeah. I was talking to somebody earlier today. One of my coworkers was talking about like they're going. Two of them are going to a site audit in Fremont, California, for Jabil. We were talking about like how expensive and stuff is. And he was like, "Well, I driving and stuff's more expensive, but you gotta be making more money, right? And it's like, well, you see the average salary is not much more, and then we don't count in extra taxes and stuff, and then the houses are $1,000,000 for a cheaper one. And it's like, you're really not making that much more money. So,
Very high tax in California. We have high average house costing dollars. Not only is this my property tax rate, it's also because of high valuation. So, one mess.
yeah, I mean, they're excited to visit, but I don't think they're ever keen on ever trying to move there.
No, I don't think so either. And if they really want to get here in California, go to LA and drive.
Yeah, it'll change your mind.
That's so
I remember I drove in Miami a couple of years ago, and it terrified me. It was awful.
yes, awful. Yeah. Yep, LA is too.
It's like nobody just even follows the rules. It's like, whatever, let's just do what we want. So,
Someone that lived there told me on my last visit that it's like a bunch of angry fifth graders on the road with other cars. Just,
it seems accurate.
yeah.
Yeah.
Not one of my favorite places. And it's gotten worse and worse over the years. I thought it was bad when I was first there, but it's gotten so much worse. And for example, between San Diego and LA, just a few years ago, the American County Association Conference was in San Diego, was out there with friends, so we went umbrellas for the water. And well, I should have finished another drive.
Yeah. Reminds me of driving through Atlanta.
There we
I
go.
used to live close to there. Like I didn't have a license at the time, but we've taken trips back up to visit family and stuff, and driving through Atlanta is just awful. I've got like 8-lane interstates that are like, you have to have a degree to be able to understand like what the signs are trying to tell you. It's terrible.
Yes. Yeah, all these seemingly meandering roads that are exit off the freeway.
Yes.
Yeah, I don't like that. You always have to time it specifically for driving through Atlanta. A friend of mine left for last to drive to Atlanta, and I said that he never drove to Atlanta. He drove to Atlanta, and I said, make sure you time it just right with Atlanta.
Yeah.
So he left, and spelled one this week. So yeah, he was timing just right to go to Atlanta. I think that's it. It sucks. Best time to go through is the middle of the night.
Well, I'm gonna get going. It's nice talking to you.
You too, as always.
Yeah, and enjoy your holiday. It's the great term.
It is. Yeah, it sure is.
All right.
Yeah, this one is. No, it's cool. Yeah, Simchat tours next week. Yeah, all falling on our classes. Okay.
All right. I'll see you next week.
Thanks, well, you take care.